So the US threat to escalate tariffs on China is a mistake on top of a mistake, and once again exposes the blackmailing nature of the US. China will never accept this. China will fight to the end. That is the statement from the country's Commerce Ministry as the country threatens to take further countermeasures against the United States to safeguard its own interests. Hence, then, that rather than backing down amid Trump's threat to impose an additional 50% tariffs on Chinese imports, China could dig in and increase further its retaliatory tariffs on the US. That as Trump himself hints at possible deals with other individual countries.
Would you be open to a pause in tariffs to allow for negotiations?
Well, we're not looking at that. We have many countries that are coming to negotiate deals with us, and they're going to be fair deals. And in certain cases, they're going to be paying substantial tariffs. There'll be fair deals.
There have been some mixed messages from your administration. You're talking about negotiations, and yet others in your administration are saying that these tariffs are actually permanent. What is the action?
Well, it could be. They can both be true. There can be permanent tariffs, and there can also be negotiations.
Well, let's bring in our business editor, Charles Pellegrin, who's going to bring us more, Charles.
Yeah, I'll focus on the U.S.-China trade relationship between the world's two biggest economies, so a very important one. Trump vowing to slap an additional 50% tariff on Chinese goods unless Beijing withdraws its tit-for-tat retaliation it announced following Trump's Liberation Day announcements last week. That would lead to cumulative tariffs worth 104%, and that threat from Washington appears to have just perpetuated a negative spiral, with China pledging to retaliate even further in a statement from the country's Commerce Ministry read out loud on the national news. Take a listen.
The so-called reciprocal tariffs imposed by the US on China are groundless and a typical unilateral bullying practice. The United States' threat to escalate tariffs on China is a mistake on top of a mistake and exposes again the blackmailing nature of the US. China will never accept it. If the United States insists on its own way, China will fight to the end.
Yes, so Charles, that response from China suggests a negotiated solution doesn't appear possible in the short term anyway.
And that suggests further decoupling between the world's two most powerful economies. The U.S. represents about 15% of all Chinese exports, and the export sector represented about a third of China's GDP last year. So these U.S. tariffs will have a definite impact on Beijing, but Xi Jinping has a few tools in his tool belt that could help soften the blow and support his domestic market. China's central bank has allowed for depreciation of its currency, the yuan, in order to boost the appeal of its exports to other countries around the world. The daily reference rate it fixes has crossed a symbolic threshold for many analysts, where a dollar is worth now over 7.20 yuan, so currently at even 7.33 yuan. More could also come in the form of loans to stabilize the market, as well as stimulus. And the country's state planner has also held a meeting this Tuesday with domestic companies about the economy and how to deal with additional tariffs. As far as the stock markets are concerned in the Asia-Pacific, after days of steep losses, the Shanghai Composite now trading a little bit higher, over 0.5% higher. The Hang Seng trading flat. They're recovering slightly, as I said. The Nikkei in Japan, though, is seeing the biggest rebound, up over 6% at the close after Trump and Prime Minister Shigeru Ishiba have agreed to open trade talks.
Let's go back to China, though, Charles. I mean, they've had years, haven't they, to reduce their reliance on the US as an export market.
And that's what has happened. This trade war between the two countries really started during Trump's first term in 2017, just before Trump imposed the first tariffs on China in 2018. Well, just over 19% of Chinese exports were heading to the U.S. Every year, and that percentage has fallen in the 8 years since, as you can see there, settling at just under 15% last year. Luke Schrago has this reminder of how that clash of the economic titans that are the U.S. and China has unfolded.
Donald Trump fired the first shot in what was to become a long-running trade war with China back in 2018. The US president's first term saw tit-for-tat rounds of tariffs slapped into place, which finally culminated in a 2020 deal for China to commit to buying an extra $200 billion worth of US goods. Joe Biden kept many measures in place when he took office, expanding trade restrictions starting in 2022. But it would be Trump's second term when tariffs went into overdrive.
We're talking about a a tariff of 10% on China based on the fact that they're sending fentanyl to Mexico and Canada.
China responded on February 4th with duties on US coal, liquefied natural gas and farm machinery, with additional US levies of 10% coming in on all Chinese imports a month later. Beijing retaliated again with tariffs of up to 15% on key US agricultural products, but Trump wouldn't be stopped. Naming April 3rd Liberation Day, the US leader announced a slew of tariffs, including another 34% for China and duties targeting Asian nations which had seen cross-exporting and the channeling of manufacturing out of China to avoid trade barriers. Beijing announced a 34% tariff on US imports the next day, along with further export controls on rare earth minerals, vital in fabricating high-tech components. Trump then evoked his threat to boost levies on any nation that reacted, warning Beijing what would happen if it didn't back down by Tuesday.
If that tariff isn't removed by tomorrow at 12 o'clock, we're putting a 50% tariff on above the tariffs that we put on. Hundreds of billions of dollars a year they'd make on us on trade, and it shouldn't be that way.
As Trump said that the US would be talking to China, Beijing responded, vowing to safeguard its rights and interests.
Finally from Charles, what about the European markets? How are they looking?
Well, after a 4-day losing streak, European markets starting this Tuesday session slightly higher. As you can see there, the Paris CAC 40 up over 1.5% higher, the DAX in Frankfurt over 1.3% higher, the FTSE in London up over 0.9% higher. The mood here partly depends on how negotiations between Brussels and Washington will continue moving forward, and I think that's where you're going next.
Exactly, that's exactly what we're going to talk about now. Charles, thanks very much for now, because the